Welcome to yet another series in Get More from Mallapuram. I really thank all of you for coming down today. Okay, and let's get out to the today's topic of the day. I do not represent any one insurance company, and we will be discussing only issues related to insurance. So we are not intended to discuss anything other than insurance here. And at the same time, we don't want to criticize a specific person or a specific organization or a specific product of any of the insurance companies. So we are not intended to criticize, number three. And at the same time, the opinions which are discussed here are purely personal. It can't be taken as a proof under any court of law. I hope this actually clarifies and gives us an opportunity to be as a neutral approach towards analyzing the different solutions which are available under the insurance policies of different insurance companies, right? And today's topic of the day is on my home, my sweet home, my responsibility. And what are the 10 myths which are there in the home insurance, which we want to really give a clarity so that you'll have confidence when you're actually purchasing your home insurance, or when you already have your home insurance in place, then you may have to review your existing policy. So we'll be here to help you out in this particular aspect. Okay, so that's about the declarations, and now straight into the topic over here. So it's my home, my responsibility, right? And the ten myths about the home insurance. So will be the agenda for the day is we'll be doing a little bit of situation analysis over here, right? We'll be doing that situation analysis. Then after that, we'll be discussing. That's the real concept. That's where we'll try to provide the clarity for your confidence, and then we will be able to do what are the other changes which are there within the policies, and we'll be also able to review your whatever that we have discussed, and then we'll get into the conclusion part. So first part is all about the situation analysis. Home, our sweet home. It's a priceless emotional investment that we have. For every family, like owning a home is something which is a dream come true. And it is actually regarded as one of the most highest possessed asset, the value which is given by the individuals. So it's the most valued possession what we have, and there are a lot of memories. There's a lot of memories. There's a lot of sweet home about our home, our childhood, which we got through our home. So there are a lot of memories which are actually attached with our home, and then. Most of us, it is like a heaven on earth. Like now you do a lot of work outside, you go here and there, you do many things, but at the time when you just reach home, you just relax. That's the heaven on earth. And with the family members taking care of you, when you just reach back home, they help you to get refreshed, recreate yourself, have some food and enjoy yourself. That's the heaven on the earth. Okay, and the most of the times what we look at here regarding this particular thing is the insurance which is given to our priceless emotional investment, that's our own home, is normally not taken by us. It is actually forced, if at all we are taking any loan for purchasing our own home, okay, by the bankers. Okay, and in a way they are actually forcing you to take the policy because they are interested in the value of the asset, because they have given the loan for the asset, right? But at the same time, I actually thank all the bankers. The reason, because of which at least people started purchasing the home insurance. Okay, let me just give some more analysis of that. Okay, so what are the things which are generally which can be covered under the home insurance? It is the building which can be covered, number one. It is also the contents which can be covered, but the contents within the home which can be covered, right? And also the liability which can turn up. Liability, like something happened at our home, and because of it, some of our neighbors can get affected. It could be a fire accident which happened, and a lot of smoke which just went on, and probably just nearby there is a hospital which is out there, and the smoke just entered into the hospital. The patients got suffocated because of that, and they have to evacuate the patients. Like in these circumstances, the owner of the hospital can always come back to you and sue you for whatever that happened because of the incident which happened at your home. Okay, these are kind of liabilities which can turn up. So all these things can be covered under the home insurance. Okay, so going further, coming to the basic cover under the building part, the section of the fire, the home insurance. We have fire could be like, it could be a small electrical short circuit which can happen, and then it could be also a fire on the stove. Most of the times it does happen because there's a lot of work which the homemaker need to take care. So sometimes, like, they just get involved into so many parallel processing. There might be some fire which can catch up on the stove, right? We have seen such kind of incidences at home. I do remember a few incidents in my own life. Okay, and there could be an explosion which can happen because the cylinder which is out there, the gas cylinder which is out there, which is a real dangerous thing. If it is not handled properly, if it is not handled with safe and security, right, then it can lead you to the explosion. So these things can be covered under the policy. And I'll just quickly go through this, the major things. Even the lightning, because of the lightning, if say something happened to your home, even those things can be covered under your policy, right? And then the STFI, this is the smallest verb, the thing what we use in the fire policies, that STFI, the storm, tempest, flood, and inundation. So recently we had a huge rain floods which have come in Hyderabad, and if you had your home insurance, all the damages which happened to your home can be covered through your home insurance. Okay, the STFI coverage, and it needs to be taken as an add-on. Okay, and then we can also have the coverage of the earthquake. Recent past, we have seen in the northern part of India where there's an earthquake which has come in. If the house or the building or the apartment is broken because of an earthquake, even that thing can be covered. This need to be taken as an add-on cover, an additional cover within the policy. Then we also have something called as subsidence. So these are the major things which are there under your home insurance, and we would love to actually explore a little more deep into it. But there is one thing which we will definitely get into. That's about the subsidence. It is actually seems to be very small, but when it actually gets in action, then there's a huge loss which can happen to your sweet home, right? Okay, so this thing will go a little deep with the story going further in the presentation. But let me just touch upon a few more little things before we get into the real clarity for confidence. That's the discussion on the points. Okay. So the next thing is, about the contents. Content is the furnitures, the fixtures, the electronic equipments, and even your jewelry or the valuables, like it could be an antique painting which is out there, or an original painting which you have acquired or which you purchased or which you have been gifted, right? And it could be even the curious items, like a very precious thing or very rare things which are there, which cannot be found elsewhere. Even those kind of things can be covered under the home insurance. Okay, and that's about the content part. That's the major part, and then now the real section which comes up, that's about the clarity for confidence. Now the real topic begins. Okay, now let's take up one by one. As we just mentioned earlier, in the fire, in the building section, the fire section, we have something called as subsidence. Let me just dwell upon on that. And this comes under the fire section of the entire policy, right? So let me just start with the story over here. Okay, and there is a person out there who owns a big land right now, and whenever we have something like a farmland which we purchased, like by our parents, and we know, like we used to go there, we planted few plants over there, and we generally we used to water them, and then it just grows. It could be like a plantation, it could be like a green garden which we have actually grown up, right? Okay, so we have grown up over a period of time, and then it just flourished. So what happens when a big tree grows up on a particular piece of land? What it does, it actually sucks up the entire moisture from the land. So because of that, what happens? There could be a little low lying which can happen underneath the tree, wherever the tree is out there. Okay. Now, probably it has taken 10 years, 15 years, 20 years, or even 30 years, right? There's a big tree which has actually come up. And after the tree has been come up, then probably then the next generation people thought like, now let's build up a dream house over there. Okay, when we are actually building up a dream house, okay, what happens? We will just cut off those trees from the ground, right? We'll just cut off those trees from the ground. That's how you can actually see out here, right? Okay, and then what happens? We try to level up the ground somewhere, right? And we equal it up, and then we start constructing our home. Is what generally what we do, right? Now see what happens. See, because it has been, the moisture has been sucked up consistently over a period of time. So there is a lot of non-moisture area which was there in the which is beneath the land level. Okay, so what happens whenever the construction happened? Probably a year or 2 years, or it might take even 3 or 4 years down the line, or even a 5 year down the line. Okay, what happens? The moisture which has been lost will be regained by the soil, will be regained by the mother earth. Okay, so what happens after that? Then once you have constructed the house or the same place, now the land has just come. Now the land is pushing the structure which is on the above. Okay, because of which there could be the cracks which can come onto your dream home, and this is absolutely unexpected. And this kind of subsidence can be covered under your home insurance. We never knew. See, people are going on the outskirts. Probably sometime it was a farmland, or sometime it was a garden before. A plantation trees used to be there, and after that we have actually, now we purchased a flat over there or an individual villa over there, and we never knew what was there inside the ground. So we never knew what was there. Okay, so these kind of subsidences can create a havoc in the complete structure of your building. Though it might be designed by the best of the best architects, though it might be designed by the best people and have given enough of good idea in the structure, but the entire structure can be put under pressure because of the moisture which got regained within the soil. This can actually create a lot of cracks into your house. Okay, this is one. And let me just continue the story a little bit. Okay, now actually coming down to a situation wherein we have our own house which has been constructed. Now there's an open land which is out there. Now, because there is an open land out there, we normally what to do? We just go out and we plant the trees. Right? That's what we all do. We want to have the greenery at home, and we want to have the coverage, that kind of situation out there. Okay. Once it is out there, okay, now the tree has grown like a very big plant, right? And now it started sucking the moisture from the soil. And because the moisture got sucked from the soil, there could be a little low lying area which can happen underneath the soil, underneath the earth, and because of which the building can go down. And this might also can create the cracks within your building. Okay, if such kind of things happen, even all these things can be covered under your home insurance policy. So subsidence is something which looks very small, which you'll never see it upfront, but it can actually happen over a period of time. So probably people might think like, now first year I've taken the insurance for your home, the sweet home, and then there was no claim, nothing, everything went on well. We started paying the renewals for the continuously for the next 5 years. But till 5 years, there was no claim, nothing happened. And then probably suddenly we think, why am I actually unnecessarily paying all this money? Let me not pay this money. There is no need for me to pay this particular renewal. And then we just leave it. The moment we leave it, probably the subsidence can turn up and it can give the cracks in the building. So we suggest all of the people to continue your existing home insurance policy, even if there are no claims. We don't want any claims out of our sweet home, right? You're with me? Yes or yes? Thank you. Let's go ahead. So this is one the first thing which I just wanted to give an in-depth clarity on that. Now let's go to the next point. That's about the value of the building or the flat. How are we going to decide on the value? Because that's the value what we are actually going to give to the people, like to the insurance company for the valuation, right? So value of the building or the flat, if you look at, so There are three different ways how it is done. There's an agreed value, there is a reinstatement value which is given, and then there is an indemnity value. That's the market value which is given. So there are three different ways how the values are given on the basis of insurance which will be decided. Okay. The first and foremost thing is about the agreed value. Agreed value means you and the insurance company, we actually look into the sale deed agreement what we have, and from the sales deed agreement, what we do is we just pick up the value of whatever is mentioned out there, the value of registration, right? And then we go with that registration value. This is called as agreed value. But we all know most of the times it is like the registration value and the real payment value. What happens is sometimes it is two different values. Okay, we don't want to get into the nitty gritties why it is so, but we'll only stick to our discussion over here, only up to the insurance part. So agreed value, if it is taken, most of the times it is an under insurance. Probably the value of the asset is say 1 crore, and probably the registration value what we have taken is only 60 lakhs or 70 lakhs, right? And if we have actually gone with only 60 lakhs or 70 lakhs as a coverage, then if there is any loss, the insurance company will be paying you only to that extent of your coverage, number one. At the same time, they will also calculate your under insurance, and that particular percentage of your total payable claim will be deducted. So that's where when the claim comes up, that's when we understand how all these things which are that we are mentioning over here is actually going to be affecting you in the claims process. So agreed value, we don't suggest you to have it, but instead of agreed value, we always suggest go for a reinstatement value. Reinstatement means, say suppose there is a loss which has actually happened. Okay, it's a 5-year-old building which is on which we have taken the policy, and then there is a loss. Probably there is an earthquake and the entire building has gone into pieces. So now we need to reconstruct the entire house. Now, probably 5 years back, to construct the same house with same quality, it might have happened only 30 lakh rupees. Okay. Now, after 5 years, now your cost of your steel got increased, your cost of your brick got increased, your sand got increased, your cement got increased, your labor cost got increased, right? So you might not be in a position to construct the same house with the same 30 lakh rupees, which you did it 5 years back. Now, probably you might have to require, say, around 60 lakh rupees now. Okay, but if you have insured it with only 30 lakh rupees as your past cost of construction, then it is not the way how you can actually arrive or reconstruct or reinstate your entire asset. So to reinstate the entire asset, we will be only looking at the current cost of construction, current value of the construction. So normally in accounting terms, we do depreciation. But here in insurance, to reinstate the same asset, we appreciate the value. There is something called as indexing method what we use. Okay, I'll not go deep into that, but there is something called as an indexing method. Once we use that, then the value of the asset will be increased. Okay, and it will be increasing over a period of time. What we do is currently, say suppose there is a house of say 1 crore what we have purchased now, and after 1 year it will not be the same 1 crore. It will be an escalation of a particular percentage, because we need to calculate, we need to take the inflation in place, and then we have to escalate the value. Okay, this escalation is taken care when we go with the restatement of the value of your asset. Okay, this is number two. Number three is indemnity value. Indemnity value means it's like now I actually used up. It is just like a depreciation if we actually use it, just like our accounting method. Like I've purchased a house of 30 lakh rupees. They constructed a house of 30 lakh rupees 5 years back. Now because I'm using it consistently, then the value is getting decreased by the accounting principle called depreciation. Once it is actually getting decreased, then it is actually called as depreciation, and then we only reinstate only to the extent of the depreciated value, the lowered value. But out of these three methods, whatever are there, we only recommend you to go for the reinstatement value. That's the second method which we have actually mentioned out here. I hope this is clear, right? Okay. So the value of the building, how are we going to give it? We need to give only by means of reinstatement method, not by any other method. Only then you'll be securing your dream home property. Okay. Now, one more thing regarding the value of the building. Generally, people tend to forget about this, and especially when it is in own house with a boundary wall and everything, we need to include the value of your plinth and foundation. The plinth and foundation value is not given. Generally, what how the valuation they do is they actually take the area by means of the sale deed value. They take the area of the built up area, and then they give a particular percentage of cost of construction, and they actually create the total value. Okay, this is how they do it. Okay, now they actually tend to forget about the plinth and foundation. They forget about the plinth and foundation. Okay, now the plinth and foundation need to be included into the value of the asset, number one, and the boundary wall of your sweet home need to be also included into the value of your asset. This is actually mandatory. Okay, and there's a second thing which normally people tend to forget while mentioning the value of the asset. So this is something which need to be taken care. And then coming to the value of the contents, which is other than jewelry. Jewelry, we'll take it up as a separate part. Jewelry and even the valuable contents which are out there. It could be the paintings. It could be anything which is of gems, jewelry, right? So those things we'll do it separately. But let's look into the other contents. If you look at the other contents like furniture, fixtures, it could be your electronic equipment, your utility kind of things, everything. Again, you have the three methods which can be used. We suggest you to have it and do it only by means of reinstatement value. Go with only reinstatement value. See, there are different methodologies how you can actually use it. See, normally when you actually ask the insurance people to reduce the premiums, they actually do this kind of tech tricks wherein they will, instead of taking the reinstatement value, they go with an agreed value, then the premium gets reduced. They might even go with your indemnity value. Even because of that, the rate will decrease, the premium will decrease. So it is not just decreasing your premium by little more, but what we suggest is have a proper coverage such that tomorrow if there is any loss, you should get your entire value. You need to get it back such that you can rebuild your dream home. Your purpose of having your dream home should never be put it across for any risk. So even if it takes you to pay little more premium, see the premiums are very less, and especially when we come into the home insurance, which few of the insurance companies they also call it as dwellings. Okay, that means the asset used only for the living purpose, not for any commercial purpose. It is only for living purpose, right? Those things can be used, and the premiums are much less, because there is most of the times there is no more risk which can happen. So because of which the ratings are also very less. Okay, and the bankers also give a different kind of policies. It's a long-term policy because up to the loan amount they actually calculate the entire premium and they charge you at single stretch. Okay, these kind of things. Let me just there is a little catch over there. We'll also deal with that particular thing and during our session. And let me just get back to our the value of the contents. That's the third point. Okay, so we suggest everyone to go ahead only with the reinstatement value, right? Okay, now the best part is coming to the value of the jewelry and the other valuables which are there. Okay, how are we going to do it? Okay, how are we going to give this value to the outsider? So the most challenging part over here is especially in our society what we have seen, jewelry is something which is very intimate possession what we have, and most of the families they love to have it, not just for just having it, but they also wear it. Okay, so and most of the this particular asset is there is no bill which is actually given, or something which is hereditary which they got it sometime backs few years back, or 30 years back, 40 years back, the forefathers have actually purchased it. Now there is no bill, now they acquired it by means of inheritance. So they doesn't have a proper documented evidence of their purchase most of the times. Okay, okay, nowadays people are actually getting the bills and other things because they're doing the online transactions, so they're able to get those bills. But earlier it was not like that. And the gold is such a precious item which is at least every household, almost every household of India, they have a little bit of gold here and there. Okay, and which is not accounted properly. So in this particular situation, how are we going to give the value to the insurance company? Because unless we give the right value, they don't cover, or they don't give back the value when there's a claim. Okay, so there are different methods which are out there. Okay, different companies gives different philosophy they have. Few companies, they say we cover the jewelry only up to 1 lakh rupee. Few companies, they say we cover it but only up to 2.5 lakh or 5 lakh rupees. Okay, so they say up to 5 lakh rupees. Okay, you just give the declaration, we just accept it. But if it is more than that, then what? Okay, so there are different situations which are out there. We just made a common way of actually comparing the options which are out there. The first option is if the value of the jewelry is less than 5 lakhs. Less than 5 average, I'm saying. So in companies it is 1 lakh, 2.5, 5. I'm just taking an average of 5 lakh of coverage. Okay, then what is that we are going to declare to the insurance company? We need to declare the entire list of your jewelry. Entire list need to be given to the insurance company. Not just that, you have to give a complete description. If it is, say, suppose a pearl set, a pearl, pearls which are inbuilt into a golden ornament, right? You have to give that entire description. There are so many valuable pearls, so many number of pearls with so and so design, which is of so much of weight, with so many number of pearls, and the gold weight of so much thing. So that's with some green pendants here and there, or some red stones which are out there, or rubies which got inbuilt, or there is a diamond. There is a diamond which is most precious, which is as a core stones which has been inbuilt into the entire ornament. Okay, so we have to give the entire description, and we suggest you also give the photographs of that. It's needed. See, it's better we provide all the details well before, such that tomorrow if there is any claim, there should not be any there should not be any confusion which need to be there. We should be clear, the insurance company should be clear. This is a claim, they should be clear enough to provide the entire thing back to us. Okay, so this is how it is going to happen. And then one more thing is the market value. Okay, the market value of the current ornament you have to give. You have to give. Okay, so because the gold rate is just zooming up. Sometime back it was 7,000, 8,000, then it went on to 13, then 17, then 30, then 25, and now it is somewhere I think around 50,000 rupees, right? So all these things, the current value is your duty. It is your duty to give it to the insurance company. Might be last year the value was per gram was, I think, for 10 grams it is per gram is coming to around 30,000 rupees. Now it is gone to 50,000. So you may have to change those values and then submit again on your renewal. If you're not doing that, you are only causing an under insurance for your assets, for your contents. So it is up to you to decide that. Okay, so this is one. And then there is if, say, suppose it is more than 5 lakh rupees, so what is that we need to do? We need to do the entire thing, whatever that we need to we are supposed to do for less than 5 lakh rupees, the complete list, the complete description, the complete. Now instead of you giving the market value, you need to have a valuation report. A proper authorized valuer should give you the valuation report, and that forms the basis for your insurance. It might take a little more cost for you, but that's okay. That's okay, because it saves you from a lot of ambiguity when it comes to the claims. Okay, It's not just taking the policy. If there is an incident which happened, we need to have that valuation report in place. Okay, and especially for the jewelry, it could be a theft which can happen, it could be burglary which can happen. There's a small difference between the burglary and theft. Okay, burglary is there is enforced, we can see there is a forced entry of someone and taken the asset from your locker or from your safety place, whatever that you have at home. But theft means you have kept it there, there is an evidence that you have kept it there, but it is not there. So there is no evidence, that there is no forcible way of people coming. There is no breakage of any window, or there is no breakage of any door, and then people have taken it. That is a theft. So theft can also be covered under your policy, under the home insurance, but this comes as an add-on feature. So you need to pay a little more extra premium to have that theft coverage in place. And we suggest everyone to have it. Few companies, they also give an all-risk policy for the jewelry along with your portable equipment as a content. You know what happens? Because we wear the jewelry, we also go here and there, right? We go to the parties. Sometimes we also go abroad, right? Different countries we flew, right? Even in those situations, if you lose your jewelry, then also it can be covered under your home insurance if at all you have taken the all risk cover for your jewelry. You need more details, we do also have our the helpline number, which is also flashed over there. We are always with you. You can just give a missed call on 7569 This is a number on which if you just call up, we'll be there. We'll be glad to help you to know all these details and to evaluate your existing policy. We are always there. Okay, so that's about the jewelry and the valuables. And there is also another thing. Don't just give the average value. Average total jewelry. These are normally, we have seen how the clients say to the insurance company. What could be the jewelry amount? See, they don't want to reveal the entire jewelry, the value. They say, mota, probably it is somewhere around 3 lakhs. Yeah, you can actually put it 3 lakhs. See, this average kind of numbers, whatever that you say, are going to put you under doldrums when there is a claim. Okay, it's as good as you have not taken the policy. Don't give such kind of things. Okay, see, even if you don't take the policy, that is okay. But if you take the policy and you don't declare the values properly, that is as good as you are not taking the policy. How does an insurance company know what is the value of your jewelry or what is the value of your contents of home? They don't know anything unless you declare it. So the onus of declaration of the total details lies with you. Right? You're with me? Yes or yes? Good, great. So coming back to the valuation of your jewelry and valuables, please don't declare any average values. That doesn't going to work out for you. Okay, so always declare what kind of values you. It's always better you have some kind of valuation reports in place, so it becomes easy. So no average value at all. Okay, right? And then yeah, this is one more thing which I really which most of the people they don't understand while they're taking the policy. But there's something clause called as adequacy of sum assured. Okay, say suppose your sum assured is supposed to be say 1 crore or 1.5 crore as per the real value terms. Okay, now because it is 1 crore or 1.5 crore, probably your premium is actually on a higher side, little bit of higher side. So now you don't want to pay such kind of premium. What do you say? No, just take it as only 75 lakhs. It's like, no, I am declaring it. Once you are declaring it, it is an agreed value. It is not a reinstatement value. Okay, right? But once you just declare it, okay, and if there is any partial claim, like something happened and there's a part of the building got damaged, now you are actually claimed for it. Okay, let's take a small example. Recent flood in Hyderabad, there were a lot of homes which got flooded with water. A lot of damage which actually happened, and people actually claimed with the insurance companies regarding their home damage which happened. Now, once they actually look into the damage, they actually evaluate the damage. The surveyor will come to a conclusion on this is the value of the damage which happened. Okay. Once they ascertain the value of the damage, that doesn't stop there. Okay. So what is that they're going to do? Now they are going to see how much is this as a percentage of the entire value of the asset. Okay. If say suppose they get to know that say around 20 lakhs got damaged and the entire value of the asset is around 1.5 crore. Okay. And if you look into the insurance is only 75 lakhs. Okay. Right. Okay. Now the valuation is different. You have not declared the entire value, but you are at the same time you're trying to take the loss for the entire damage which actually happened. There could be two things which can happen. Either the insurance company will say you have actually underinsured the your asset, so we will not be giving you that. So you have underinsured. If you have taken only 75 lakhs as a coverage and the entire value is 1.5 crore, so they will say 20 lakhs is a payable claim. They will not give you the entire 20 lakhs. They say that because you have half of that only asset value you have insured, so we'll give you only half of the damage. They will give you only 10 lakh rupees. Now, probably few thousands is what you saved while paying the premium. But when it comes to the claim, there will be few lakhs which you will be losing. So you have actually covered your asset, but you have not covered it entirely. This is where the small things will become a huge difference when it comes to the claims. I hope you are getting it right. Okay, so this is how the things will change. Okay, but there could be also even one more thing. If there's an adequacy of sum assured clause which is mentioned, and there's a partial loss situation, and if the valuation difference is more than 15% or 10 to 15% sometimes, right? Then the insurance company will say you have to pay me the remaining premium, and it is up to the insurance company whether they want to pay your claim entirely or not, but they will collect the premium because you have given a wrong or you have given a less information. Okay, so don't give any less values to your insurance company. That doesn't going to serve neither your purpose nor their way of giving out the claim. It becomes a lot of problematic conditions, right? Okay, so let's go to the next one. Let's go to the next one. What are the things which are not covered under your home insurance regarding your building? Okay, let me just dwell upon a few things over here. The things which are not covered under home insurance. Okay, regarding the building, structural defects, the structure what is laid out and the way how it is constructed, there's any defect in the structure, none of the insurance company will pay any claim on that. Okay, number one, the structural defects. Number two, if there's a poor workmanship because they have to deliver the project on time. Probably they just constructed it. They have not cured the building properly. Okay, or probably they are not constructed in the way how the professional way of construction should be. Right. So the poor workmanship because of which the load balancing has not happened and the building has fallen, then also it is not payable. It is not payable. Okay, so the proximate cause, if it is because the proximate cause means the exact reason why the claim has come in, if that is because of the structural damage, not payable, poor workmanship, not payable, and poor maintenance. You have constructed well, but now you are actually not maintaining it properly, because of which the dirt was there, something got spilled over here and there, and the fire got caught up, and then the entire building got into the damage. Not payable, right? So they actually look at, even if there is a fire, they look at the proximate cause, where exactly the fire has started off. Okay, so those things are not payable. Insects attack, not payable, not payable, right? Okay, the termites attack, they come in, it's very less, but we have seen a situation wherein there's a huge termite attack onto a building, and the entire building got damaged. Okay, not covered under your home insurance. Okay, renovation, there was a structure which you insured, but now you're renovating it or you're repairing some part of your home, right? While you're doing so, it got impacted and it has damaged the other part of your building. Not payable under your home insurance, right? Okay, and you see, your home insurance is for you to live, or you can own it and you can let it on a rent only for the living purpose, not for any commercial purpose. But if it is given on a commercial purpose, And if it is given on a non-residential rental purpose, like sometimes we have seen in few situations where the building was owned, and because nobody was coming, they have actually given it for a go down. And in the godown, there is some flammable liquids which have been stored, and along with that, some non-flammable things, but which can catch fire, was also stored along with that. And there was a huge fire accident which happened. Not payable. Not payable, because that is not the purpose for which you have constructed the house. Home insurance is only for the dwelling, for you to live, or any person to live, not for any commercial purpose. Okay, or any illegal activities going on, and because of which there was a loss which happened to your asset, and there's a greater loss, damage which happened. Even in those situations, it is not payable, right? And coming to the contents part, if the contents are under warranty when you have actually purchased, that means it is repairable under any contract, or it is replaceable under an existing contract, then it is not covered under your home insurance, right? Okay, and probably you have kept your money at home. There's a flood which has come in, and the entire money got drained, or sometimes it has gone with the flood. Okay, not payable. Money, your promissory notes, or your legal documents which you have stored at home, if they have also gone in water because of some accident or some fire accident happened and it just got burnt, okay, it cannot be recovered, or it cannot be claimed under your home insurance. Okay, and then there's a seepage of water which has come in, because of which there's a lot of damage to your furniture which happened, and you want to claim that. Not payable. It is not payable. Okay, and then coming to the pollution or contamination which happened, sometimes we have seen in situations like seashore front villas or houses. We have seen, because of the lot of humidity which is out there, the electronic equipments, or the iron parts within your equipment, which just get rusted so frequently, and because of which there's a huge damage which happened. There's a mechanical breakdown, or there is an electrical breakdown which happens. Those kind of things are not payable, because that's not the environment in which they are supposed to be used. Okay, so any kind of those pollution kind of thing, those contamination kind of thing, not payable. Okay, and yeah, one more thing. See, there is a fire accident which happened in a different place, in a nearby location, right? And there's a huge fire which got in, and the smoke got into your house. What we have seen with our personal experience, it is not the fire, it is the smoke which actually damages more than the fire. Okay, and that smoke has entered, and it has occupied your contents, and when you started cleaning your contents, it got damaged, right? These things not payable. Not payable, because this is a contamination which happened, and this is in pollution. If it is through contamination or pollution, yes, it is not payable. Okay, right? And malfunctioning of internet. These days, people are actually going for the motion sensors, and all these motion sensors are connected through a Wi-Fi or through internet to a particular control center, and from there it is actually controlled. And sometimes it is through your mobile, or through your laptop, or through your other devices like your tablet. People they are actually controlling it. And if there is any malfunction which happened, and because of which there is a damage, okay, suddenly like you have to open up your glass door when you're actually about to enter, and there's a malfunctioning of the receiver of the motion, okay, and because of which the door did not open, and suddenly you just collided, and the entire glass got damaged, right? Not payable. Not payable. Malfunction of internet or Wi-Fi, because of which there is a loss which is happening, not payable. Malfunction of technology, not payable. Okay, right? Data loss. There's a damage of the internet, the system at home, or the laptop at home, and probably they can give you back the value of the laptop if there's a fire accident which happened and you lost your laptop, but they can't retrieve your data and give it back to you, or the programs you already purchased and installed it to your system, and now you want to you have to repurchase it, but you just can't have it. You'll only have the asset which is getting replaced. Okay. But there is any mechanical breakdown, even then it is only the asset which is getting replaced, but it is not the data or the programs which are installed onto your system. They can't be given. They just can't be given. Okay. It is not covered under your contents. And theft traced to an employee. Okay, you might have employed few people at home. It could be a maid or somebody who comes and washes your clothes at home, or someone who just comes and cleans up the entire home, dusting kind of thing, and then they go off. So if there's any theft which happened because of those employees who are employed by you to do a particular job at your home, and there's a theft happened, there is no coverage for that kind of theft. Okay, if it's traced to them. And if the same theft is also been done by one of your family member, even then the insurance company will not be able to pay you that particular claim, because you have given the access for the people to go and access your contents, right? And they thefted it. Because you have given it, insurance company cannot take the liability onto them. Got it? Okay. And any immoral or unethical use of the property. Sometimes, like people just used it, or they have just partied it, and then because of something happening at the party, like they have actually damaged some part of the house. Something like that can happen, right? If it is an immoral and unethical kind of activity which has actually happened, right? The claim is not payable. It is not payable, right? Got it? Okay. So let's go to the next point. Even the livestock damage, like you have a dog at home or a pet at home, and it got damaged because of some incident, some fire accident happened at your place, not payable unless you have taken a specific add-on cover. There are only few insurance companies which actually provide an add-on cover wherein you can cover your pet. You can cover your pet, okay? But otherwise it is not payable. Any mysterious or unexplained disappearance of some assets in the house. We don't know it was there, but we don't know how it happened. Now it is not known. Or we kept it somewhere, we are not finding that particular asset now. Okay, if it is that kind of situation and you want to claim it with the insurance company in your home insurance policy, not payable. It is not payable. Got it? And motor vehicles, though it is your asset which you use it or which you, place it in your home, in your parking area, in your parking lot, but still it is not covered under your home insurance, because Motor Vehicle Act, for motor insurance, it is a separate policies which are given. It could be there will be a session on that, and in which we will discuss how different varieties of motor insurances are there. Okay, according to the Motor Vehicles Act, it is the third party which is a mandatory for any vehicle to come onto the road, but it cannot be covered on within your home insurance. Your laptops can be covered, your jewelry can be covered within all this insurance in place, but not your vehicles. Okay, right? And if there's any war kind of situation, there's a bomb blasting which has actually happened, there's a carpet bombing which has happened, and because of which your house got damaged, right? The insurance company will not be in a position to give you that particular claim. The claim is not payable even in this particular condition. Okay? And livestock damage, as we seen it earlier, so it is also not payable. And mysterious or unexplained disappearance is not. Okay, and yeah, coming to the next point, and this is something which is very interesting, because most of the people who have actually taken the policies, they're actually taking it through the banks. That's how the industry analysis says. Almost it is 85% of the policies of the people who have taken the home insurance, they have taken it because they have actually purchased, they have actually gotten a loan which is approved by a banker, and banker forced them. They actually said they need to have, that's a mandatory requirement for the disbursement of the loan, because of which they have actually taken the policy. And at the same time, we can't even say anything to the bankers. The reason because they want to even fund, because paying the additional money is also going to be a real difficult task for the people. So what they do is they actually give a long-term policy. Long-term policy, if say suppose they have given you a 15 years of housing loan, they might give you exactly the home insurance, which is also for 15 years. And this is actually called as a long-term policies. And the only problem, the only challenge with this kind of policy is you cannot cover anything other than the value of your building. You cannot cover your contents, you cannot cover your liability policy, you cannot have your people who are working with you at home, you can't take in employee compensation policy, we call it as a workman compensation policy for them. So all these things can be taken as a all this policy, if you are taking as an individual policy, but not as a long term policy of more than 10 years. In long-term policy of more than 10 years, there's also one more challenge over here. Probably the asset is worth 1 crore and you have taken a loan of only 50 lakh rupees. Okay. The banker will be interested only to cover the asset up to their loan outstanding. This is not to criticize anyone. This is not to criticize anyone. But what we have seen is they are only interested on what is the outstanding loan. And if say something happens, they need to able to get back the value of the outstanding principal to the bank. They are interested in that. Okay. So what they do is they only cover, they only give you a policy of only 50 lakh rupees. But it is not going to serve your purpose of having your own sweet home, right? So banker is actually getting satisfied, but you will be at doldrums if say suppose there's an earthquake, the entire building got collapsed and you're nowhere. Banker will get only that 50 lakh rupees and they're happy by actually by taking back the loan. But you, after paying a lot of EMS for such a long time, still you are helpless without any home, right? So what we request is, though it is mandatory, purchase it outside, and then you can also submit those documents to your banker. This is a way how you can do it, number one. Second thing, even if it is, say, suppose you need to go with the same bank, ask them to give you the coverage up to the total value, not just your outstanding loan. So for the entire home, number one, it might be a little more premium, but that's worth it paying it. That's worth it paying. Number one, also have an escalation clause inbuilt, because your building reinstatement value will keep on increasing. Your cost of construction will keep on increasing. At least there should be a 5% escalation clause which need to be inbuilt, and the premium need to be charged accordingly, not like a depreciation value. If you're going for a depreciation value, it is of no use. Banker is interested in your depreciated value because your outstanding loan keeps on decreasing, right? But it is not going to serve your purpose of having your own dream house, right? So have a plan wherein it need to be escalated, not it should be decreasing. I hope I'm actually making it very clear. Otherwise, the very purpose of actually taking the policy is actually gone. There is no use of actually taking that kind of policy. Instead, we also have the options which have come into the market, where it is a comprehensive all risk policy and can be given up to 5 years. At least you can actually tell to the banker, see, I'm actually taking a 5-year policy, now fund it, right? Number one. Second thing is, after 5 years, now you can actually review your values, because the values what you are given for your jewelry, your contents, your other important assets which you are going to place in your own house or dream house, right? These need to be revalued, and then you have to do it again. You have to submit those revalued things on your renewal, and then assess your policy properly. See, it is not just renewing your policy. Renewing the policy anybody will do, right? But you have to review it first. Unless you review it, don't just renew your policy just because the data has come and you are renewing it. Just don't do that. You're not doing any justice for yourself and your family. It's your own dream home, right? Okay, you need any help, our numbers are flashing out here. Okay, you can actually give a missed call on that and we'll be delighted to help you. It is 7569 645 645. Just give a missed call. Me and my team, we are out there to help you out, not to just force you to sell anything like that. No, it is only to review your existing policy, or if you're planning to take your any of your home insurance, will be there to support you. And whatever it might be the best option, the banker is giving the best option, we will suggest you to go with them. But let's have a proper review of your policies. Unless you do that, don't just take the policies just for the sake of taking it. This is a sincere suggestion. This is a sincere request from all of our fraternity of insurance. What I want to do it on this particular show. Okay. So any help, we are out there. Just dial up 7569 645 645. We'll be all out to help you out there. Okay, so this is one more myth which is out there, which we want to have some clarity on that. And yeah, this is especially this part is whether we need to take as an individual policy, or should we take it as a complete association together. Especially this situation comes up when we are actually going for the apartments. Okay? There's some 30 apartments or 40 apartments, or sometimes it is a few hundreds of apartments at a time, right? So how am I interested? Why should I bother about the entire association or the entire flats together? Why can't I just take care of only my flat and then just keep quiet, right? See, you would have actually, I would have said yes if it is like an independent villa kind of thing in the entire housing society. Okay, that might be thought of. But if it is an apartment, I suggest always go as an association. See, it helps you in 2 to 3 different ways. Okay, the first thing is because you can have more number of people together. Okay, you can bargain the better rate. You'll have the best rate. Number one. Okay. Second thing is there's so many other common assets like lift, like the staircase, like your garden, your parking area, right? And if it is below the ground level, there is some more liabilities which can turn up because of that. And then there's a common area. There is a community center which is out there. There's a gym center out there. All these things can also be covered under one single policy. And when it's going to be a huge policy, you can have the best rates from any insurance company. We can bargain to the core. We can have all add-on facilities which is coming free of cost, which can also come as free of cost. Like it could be your all this policy for your portable equipments, jewelry, or the insurance company might say, okay, up to 5 lakh rupees of your jewelry will give you at this rate, but over and above that, each and every person should declare it on their own. Okay, so you can have a better bargaining power, and you will get the best out of any insurance company when you go as a group. Okay, this is something which I always suggest, and somebody who is out there from the associations or a president or a secretary of your housing society, please, you need any help, we are all out there. We will help you out in designing your policy. What are the liabilities which can come up? Because it is not just your flat. If when you actually go as an association, it's the entire building plus the plinth and foundations and your outer boundary wall. Everything can be covered. Along with that, even the liabilities can be covered up. Somebody has just came into your apartments area, and then they got some kind of damage, and they can actually sue your association on that. Okay, so those kind of legal liabilities can also be covered with one single policy. It will be an all risk policy for your entire association and the entire apartments together. So it will be a win-win situation. We heard these days few of the governments are actually making it the municipalities are actually making it mandatory for all the associations to have the entire apartmental insurance in one single place. Okay, this seems it's going to be a mandatory kind of thing. I'm not sure. This is an information which we received, but yes, even if that comes up, even before that, you need any help, whether somebody mandates it or not, it is our dream house. Why we need somebody else to tell us that how to protect, how to actually have a proper coverage for our own dream house. So it's our duty. It's my home. It's my responsibility. You're with me, right? Yes or yes? Thank you. Let's go ahead. Okay, so it's the lift which can be covered, the common areas which can be covered, the swimming pool, and all other common assets which can be covered. Okay, there's so many people who also even say, and when we actually discuss with them, especially we had this kind of situations wherein when the rain flood has actually come up, few of the clients and their relatives have also called us and said, oh yes, we used to have that particular policy, I have not renewed it, we just forgot. This is not the way how the insurance company should actually deal with it. They have to send an renewal notice for us, and only then we'll be in a position to renew it. Is it not the duty? No, the regulator, they doesn't mandate any of the insurance companies. It is not the responsibility of the insurance companies to make sure that you are getting your renewal notice on hand or in your mail. No, it is not their obligation at all by the regulator also. It is your duty. They will send in information. There might be some technical hitch which can come up while they are sending the mail, or the mailbox of your inbox is full up, so the new mail has not come in, or probably it has gone into a spam folder in your own email, or probably now you are given an old address where you used to be on rent. Now you moved to an own house, or probably you have given your own house on rent and you're staying abroad somewhere, right? They have actually sent in a letter, but it has not come to you. Okay, there this kind of communication gaps can be there, but that doesn't mean that it is the responsibility of the insurance company to make sure that wherever you are, you should be getting it compulsory. It is their responsibility. No, our policy, our home, it is our responsibility. It is an equal responsibility. They have given the contract and we are equally bounded in the insurance contract. It is our responsibility to renew the policy. We can't make it mandatory. Okay, so we need to renew the policies. We have to keep a check on that. If your intermediate, your insurance person is out there, he should be actually giving you all the details. If it is not given, probably you can just tell him to remind you properly. Even if he doesn't remind, you need to have your reminders in place. Okay, normally what we do is for all our clients, we actually do send across all the renewals. Okay, and it's not just sending in notice on the renewals, but what we do is we actually review the policy before that. Okay, and we take this renewal as an opportunity to review your existing policy. Okay, you need any help, we are always there. It is 7569 645 645. Just give a missed call. We are all out to help you out with your sweet home insurance. Okay, and if there is any grievance, they do give, it is mandated by RDA to give the grievance redressal system. And we can actually go to the RDA on that and we can complain against the insurance company. If there's anything which is you are not satisfied enough with any of the policies that you have actually purchased, don't just wait till any claim comes up. So if we don't want to see any claims, okay, is just review the policy. Is it actually aptly suiting your requirement? Is it covering all the risk which is expected to happen, right? So if it is covering, well and good. Thank your banker or your intermediary who has actually supported your and provided you that particular solution. Thank them. And if it is not okay, we are always there. We'll help you out in reviewing and then get the proper coverage in place. Okay, just dial on 7569 645 645. Okay, and so review of the things what actually happened. So the changes about our thought process which we need to look at is the valuation of the building. This is the first myth. So don't just go by your sale value or your registration value. Go by the reinstatement value. It's not just your building. It's your plinth, foundation, and the boundary walls. Everything need to be covered under your policy. Okay, and then the value of the contents also should be on a reinstatement basis. Okay, and then coming to the subsidence, this could be a long-term latent threat which can come up. So what we suggest is don't stop your home insurance payments. Continue paying the premiums, because anything can turn up and it can challenge you it can throw you, or it can push you to the wall, and then it can actually hamper or damage your sweet home. So continue your home insurance policy even if there is no claim. We don't want any claim. We don't want any claim, but at the same time we need to have the coverage in place. Okay, let all this premium what you pay just go waste. None of us do we want to see a claim out of our sweet home? No, right? No, we don't want to see it, right? So let's take the policy, and then don't expect any claim out of it, but know all the details well before. What are the situations which can turn up, right? Because of which the sweet home can get damaged. If that is the situation, then whether those things are covered under the policy or not, it is not covered, or if you are unable to review it properly, we are out there. Dial up 7569 645 645. Will be out there to help you out. Okay, and then coming to the other things, what you have seen is adequacy of sum assured. So declare your values properly. Don't just declare an average values. No, never do that. Never do that. Declare the proper valued values. Okay, if it is not there, go for evaluation. Spend some money. It's worth it. It's worth it because it will help you a lot when there's a claim. Okay, and then coming to the other things like things which are not covered in the building, we have seen. Things which are not covered for your contents also we have seen, right? During this discussion, we also seen the differences between the long term, that is 10-year, 15-year, 20-year kind of policies versus the annual policies. Even these annual policies comes with a discount. The maximum term what we have seen in the available opportunities options which are available right now is up to 5 years, which is a comprehensive all risk policy. So go for that. Even the bankers will be happy if you are actually covering the entire assets. They'll be happy because that is going to be on a reinstatement basis, and it's an all risk coverage. Okay, and whether we need to go for an individual kind of policy in a flat, if you're there, if your own your house is a flat in an apartment, or should we go with a society? We suggest always go with as a society. It gives you a lot of additional features with the best price for everyone. It's a win-win condition for everyone. And renewal notice, don't just rely on that. Renewal is not an obligatory from an insurance company. They will only do their duty. If you are unable to receive it, it is only your responsibility. It is our home is our responsibility. My home is my responsibility, right? So that's it. And the action points, what we suggest everyone. See, this is the culture what we want to develop and what we want to create with every person and in every household is discussing insurance on dining table. Insurance should be discussed on a dining table with the family members together. It's not just you actually analyze and taking the policy. It's just not that. It should be known to every person in the family. Unless it is known to every person in the family, they will not be in a position to appreciate how much you love them and what is it you are trying to create for your entire family, and how you are going to lay down the foundation of security and safety for all the assets which you are actually not dreamed and like you're creating for the family, isn't it? Right? Okay, so discuss these things. And action points are, please check the policy benefits, the existing policy benefits which you have already taken. Please go through that. It is mandatory. It is not just you have taken the policy few years back, you just kept it on your drawer and then you never opened it. Never do that. Never ever do that. Just pull it out, check through it. If you're trying to purchase a new policy, check through the policy benefits. See, insurance is the subject matter of solicitation. Unless you ask more, it is you can't get more. Okay, you need to get more, and the more you get, the better you have the clarity and the better confidence you have when you're purchasing your policy. Okay, so check your policy benefits, check the existing benefits, and review with your advisor. All advisors are there. They will be able to help you out in reviewing your policy. If you find any challenge, we are all out there. We are at 7569 645 645. Just call us up. Just give a missed call. My team are all out to help you out in actually reviewing your existing policies. Okay, and then discuss with your family members. This is the culture of what we want to build it up. Okay, insurance on dining table. It need to be discussed. All the policies need to be there, accessible to the people. It's not just your home insurance, it is also your health insurance and also all other kinds of insurance, life insurance. It could be anything. Just have a file in place and then just have a discussion on that. Okay, and make it is available to your family members. So that's it. That's it from my side. So we come to an end of the session on my home, my responsibility, 10 myths about your home insurance. Thank you. Thanks a lot. And the forthcoming session, the forthcoming topic is going to be on cashless claims processing. The next topic is on cashless claims processing under your health insurance. Okay, so what are those 10 things that you need to take care in your health insurance while you're going for the cashless claims processing? This is a topic for the next session. So hope to see you back, and thanks a lot for being out on this day. And thanks a lot. It's been so nice to have all you guys today on the show. Get more from Mallapuram. This is Mallapuram Rajshekhar. We do not represent any insurance company. We are always with you.